Okay. All right, everybody. I hope you can listen me properly. So, guys, there's been a slight delay due to some software issues, but right now we are online. And in order for me to start a webinar, I need feedback from you. Either you can hear me properly and you see my screen. I'm sharing one of my screens with a NAGA and AtoZ Markets logo. So guys, please, if you can hear me properly and if you see my screen, type yes or plus in the question section. I just need a small feedback from you. So guys, okay, all right, yes, amazing. Thank you for your feedback. Right now you can see me, you can hear me, and we are ready to start. All right. Hello, everybody. I'd like to welcome you on our first educational webinar. Webinar name is Cryptocurrency Market Basics. My name is Yury Safronau. I'm AtoZ Markets Chief Currency Strategist, and I'm a person behind the daily free Forex signals on atozmarkets.com. I have a PhD degree in finance and I work as an independent equity manager. We have extensive experience in trading stocks, crypto, and Forex market since 2009. I would not admit that I'm trading cryptocurrencies since 2009, no, but I started trading Forex back in this year. So before we start, I'd like to tell you that the webinar is sponsored by NAGA Markets. Let me briefly tell you some facts about the company. So NAGA Markets' mission is to serve European investors by offering self-trading tools, a market-leading social trading platforms, fast and reliable execution, competitive spreads, 700 plus CFDs, and deliverable instruments like stocks, crypto, indexes, Forex, energies, metals, and commodities, asset management services, and exceptional customer support. The product range reflects the wide range of clients the company serves and aim to acquire, from an unexpected trader to serious investor. To do this, the company has developed various platforms and tools, which together with a hand-picked team of financial markets professionals create an innovative, secure, and client-centric trading environment which can address every client's need. NAGA Trader is a NAGA Markets custom social trading platform and was developed with one goal in mind: to simplify social trading based on the promise that trading should not be an exclusive pursuit. That platform has been designed to facilitate the trading experience for everyone. By removing all the technical jargon no one really understands what utilizing a user-first interface, NagaTrader has quickly become an industry fastest growing social trading network for web and mobile. NagaTrader is more than just a social trading platform, though it's growing social community where traders get to know each other, chart, share their views about trades, copy other traders, auto-copy, and get copied. In addition to this, it's one of the only platforms where accounts can be funded by cryptocurrencies. With NagaTrader, you get instant access to over 700 CFDs instruments on cryptos, indexes, Forex, energies, metals, and commodities. An AI-powered advisor, which name is Cybo, the NAGA Protector risk management tool, and much more. All right, guys, that was about our sponsor, and let's just quickly jump to. I have some questions coming, but I would like to ask you to ask questions after the presentation. We would have enough time to discuss. And if you have some questions, you can type them, but I would answer them after the presentation. The next slide is a short disclaimer. That's a need to be done thing. I know it's not really pleasant to hear those disclaimers, but we do that because we have to. Disclaimer is the following. Any opinion made personal to the author and may not reflect the opinions of NAGA markets. All expressions of opinion are subject to change without notice. This material is considered a marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for any transaction in financial instruments. NAGA Markets makes no representation and assumes no liability as to the accuracy or completeness of the information provided, nor any loss arising from any investment based on a recommendation, forecast, or other information supplied by an employee of NAGA Markets or third party or otherwise. All right, so far so good. Let's start the educational part of the webinar. And the first question would be, what is a cryptocurrency? Let's start from the beginning. You may have heard many things about what cryptocurrency is, but you may still be searching for an understandable definition. Instead of getting too technical, here is the easiest way to think about cryptocurrencies. A cryptocurrency is the money on software platforms. It's important to keep in mind that the companies that are behind these cryptocurrencies are not only creating a new form of a currency, but a new software platform. To demonstrate how this works, let's take a look at other software platforms that you are probably already familiar with, like those ones I have on the slide. Here are a few software platforms that many people use, like Mac OS. It's a software platform for personal computers. Google Drive, a software platform for storing and sharing documents, and Swift, which is a software platform that sends money between financial institutions, like usually between the banks. On each of those platforms, a type of money is used in exchange for using the platform. Like on Mac OS, you pay US dollars, so your local fiat currency, to buy a license for operational system to use on your computer. If you buy a computer that already has Mac OS on it, the license fee is included in the purchase price. With Google Drive, you pay US dollars or your local fiat currency to buy a subscription to use the software for months or a year or space, depending on which plan you want to buy. The Swift, you pay a transaction fee to use the system, and you send fiat currency itself. Each of those systems also have a database connected to it. Like in here on the slide, you can see that the database for Mac OS is stored on your local PC. The Google Drive database is stored on Google servers, and the Swift database is stored on Swift servers. Cryptocurrencies essentially replace the US dollars or your local fiat currency that you use to purchase these software servers. The database that cryptocurrencies give you access to is based on blockchain technology. We'll speak about the blockchain technology a bit later, but for now, you need to know that there are software services that you are getting isn't a cryptocurrency like Bitcoin or just a currency like US dollars. It's not quite there. The goal of cryptocurrencies is usually to improve on some type of existing software systems on networks. When you send money via PayPal, Swift, or Western Union, you're basically sending fiat money electronically, similar to Bitcoin. However, that's where the similarity ends. Platforms like PayPal have severe limitations on what you can and cannot do. For example, you cannot receive money from a certain countries like Nigeria or before that Belarus, or even if you exceed a substantial limit, they can limit your account and you cannot send money anywhere to anyone. But with cryptocurrencies like Bitcoin, if you want to make a financial transaction, It's more open and accessible to everyone around the world. Other cryptocurrencies solve other problems, which we will explore later. But you need to know that with Bitcoins, there are no limits of how much you can send, to whom you can send, in which country, and it's much customer friendly to use the cryptocurrencies to send money abroad and even inside your country than using usual financial institutions. So let's jump to the question, is cryptocurrency real money? Since this is a new concept to most people, it will take some time to become widely accepted. This is where Bitcoin has been instrumental in paving the way for the new technology. Websites like Overstock take Bitcoin along with other traditional payment methods. Here's what the checkout screen looked like after I added some stuff in my card on Overstock. Here you can see it on the slide. And as well, there are some other websites which accept Bitcoin as a legitimate payment source. Notice that other coins like Ethereum or Litecoin are not yet accepted, but the fact that Bitcoin is accepted is a big step towards an in adoption of other cryptocurrencies. Let's see. Oh, all right. Then the risks of cryptocurrencies trading and investment. Now that you understand the basics, what are the risks of trading these currencies there are quite a few, but here are the top three. Technologies fail. Remember that cryptocurrencies are basically software created by people or companies. So just like older websites like Web1 or Pets.com, in dot-com bust, during the dot-com bust, there's such sites as Pets.com and Web1. Some of these technologies will fail, and they will fail spectacularly. Like right now, there are a lot of buzz around certain cryptocurrencies, increasing several thousand% in few months. This has a lot to do with ignorance and hype. Just like when people found out that this new thing called the internet would change the world for business. Did it change the world? Yes, of course it did. But was there a lot of dumb money that overhyped the first wave of internet companies? Absolutely. So just remember, trading cryptocurrencies is kind of like trading a software stock. Some of these software stocks will change the world. Other will explode in a giant ball of fire. There are a lot of scam coins out there, so be careful. Like penny stocks, they're just a company on paper. Almost anyone can create a new cryptocurrency. Learn how to separate these scams from a deeply underpriced currencies, then use proper risk management and play the odds. Second risk is requires technical knowledge. So let's face it, cryptocurrencies were created by super nerds. Like with Linux, Linux is an operational system. There is still quite a bit of technical know-how that is required. You don't need to know how to code, but if you are not good with computers, you may want to stay away from cryptocurrencies trading, at least until they start building more user-friendly interfaces. Don't get me wrong, I'm just saying that if you don't possess a certain skill set, that you shouldn't get involved into this area. This could cause you a loss of money, and a lot of money can be lost very quickly. If you don't know how to swim, you don't dive, right? If you don't have proper technical knowledge about computer and cryptocurrencies and how they work, you shouldn't be involved in a process trading it. So basically, you get a picture. So if you don't have enough technical knowledge, probably you should not get involved, or at least you need to find someone to trust to help you to get into this business. All right, and there is a broker risk as well involved. Since there is emerging technology, there is still a lot of unknowns with trading at scale and how brokers and software will react to certain surprise events. If you think that Forex brokers are risky, then you should consider cryptocurrency brokers at least twice as risky. Not just because they could be shady, but there is still so many unknowns with the technology. However, I would still trust the bigger cryptocurrency exchanges over a lot of offshore binary option brokers. And here we are at this webinar sponsored by NAGA Markets. And I would say on my behalf that I do trade with NAGA myself. And and I can say from my pure heart that NAGA Markets is a reliable broker. And if you're thinking about, if you're not yet trading cryptocurrencies with NAGA Markets, you can go ahead and do that. It is 100% secure. All right, let's jump to another question, which is what is a blockchain? Simply put, a blockchain is a database. However, this is one huge difference between how you probably currently think of a database and how a blockchain database works. In most cases, a traditional database sits on one computer or in one location. Even if a company has redundant servers around the world, the data might only be backed up between 3 to 5 locations. On top of that, these computers collectively spend billions of dollars a year on cybersecurity to protect this data. With a blockchain database, the data can be backed up on potentially thousands of computers all over the world for a much lower cost. The information in these databases is heavily encrypted and sometimes files are broken up into pieces. So even if one piece is exposed, it will not expose to entire file. If the information on one server does become compromised by hackers, the other copies of the database have to agree that the compromised data has a legitimate change in the data. If the other copies do not agree, then the change is rejected and it's charged back to match the others. Obviously, this is an oversimplified explanation of the technology, but I hope that you are starting to see the benefits. Instead of just one point of failure, like on a single server, you now have multiple copies on the same database all over the world that is almost impossible to crack and will fix itself in a case of hack. This can also save tons of money on cybersecurity software and services. Like, for example, let's say that a hacker gets into your bank's computer tomorrow and transfers all your money to his account, then deletes any trace of the transaction. With today's technology, you would probably be screwed. But with a blockchain currency like Bitcoin, let's say, for if one server was hacked, like let's say your computer, and the fake transaction was inserted into database, then it wouldn't patch the transactions records on hundreds other copies of the database, and this transaction would be seen as fake and easily be rejected. The money would be safe, and this is one of many reasons why blockchain technology is so exciting. Let me just quickly jump to the picture you have on the slide. And this is a picture of how blockchain works and how miners create bitcoins, how miners create coins and confirm transactions. And let's briefly discuss this picture. Let's have a look at the mechanism ruling the databases of cryptocurrencies. A cryptocurrency like Bitcoin consists of a network of peers. Every peer has a record of a complete history of all transactions and those of the balance of every account. A transaction is a file that says John gives certain amount of bitcoins to Mike and is signed by John's private key. It's basic public key cryptography, nothing special at all. After signed, that transaction is broadcasted to the network, sent from one peer to every other peer. This is basic P2P technology or peer-to-peer technology. Nothing special at all, again. The transaction is known almost immediately by the whole network, but only after a specific amount of time it gets confirmed. Confirmation is a critical concept of cryptocurrencies. You could say that cryptocurrencies are all about confirmation. As long as a transaction is unconfirmed, it is pending and can be forged. When a transaction is confirmed, it is set in stone. It's no longer forgeable. It can't be reversed. It's a part of immutable record of historical transactions of so-called blockchain. Only miners can confirm transactions. This is their job as a cryptocurrency network. They take transactions, stamp them as legit, and spread them in the network. After a transaction is confirmed by a miner, every node has to add it to a database. It has become part of the blockchain. For this job, the miners get rewarded with a token of a cryptocurrency, for example with Bitcoin. Since the miner's activity is the single most important part of the cryptocurrency system, we should stay for a moment to take a deeper look on it. All right, let's jump to another slide. And this slide is called the characteristics of a cryptocurrency. Although cryptocurrencies are all based on blockchain technology, they're not all created equal. Here are some differences that you need to understand to make informed trading decisions. Transaction processing speed, total supply which is currently available. Will there ultimately be a limit on the total number of currencies available? Will there be an unlimited supply of a currency, or there is a real-world need for this software currency? Let's say any big investors in the project, does the use of software make any sense? And do the founders have a reputable background? Those are key questions which you should ask yourself before buying any cryptocurrencies in order to make money on doing the financial transactions with it. This is also skeleton of fundamental analysis, but we're going to speak about the fundamental analysis of cryptocurrencies in the third webinar. Right now, it's just a key questions for you maybe to think about. There are just a few of the characteristics that you should look at, but once you start digging into these details, you will begin to see which projects could work for their intended purpose and which ones are probably scams. This understanding will also allow you to assess the long-term viability of these different currencies and which ones will be more desirable in the future. Like, let's say, for example, there is a Tether currency. You can see its picture right here. Tether is a cryptocurrency that wants to be the proxy for fiat currencies. So there is a Tether USD version, Euro version, and etc. But each one is pledged to the value of a currency. So you can never make any money trading with it. It is purely to provide stable and liquid transactions. So one USD Tether is always to be worth about $1. If you don't know this and bought a bunch of it thinking that it's cheap comparable to Bitcoin and you would try to make some money after it appreciates, sure, it's not going to happen. You won't lose any money with it, but you would have lost out on other opportunities, investing in USDT instead of other altcoins. So understand that nuances of each crypto are very important. Let's jump to the next slide, which is called the different cryptocurrencies. In here you can see 4 sections. Almost every cryptocurrency software has a different intended purpose and individual implementation, which inherits strengths and weaknesses. It's like Windows versus Mac OS or iOS versus Android. Here are few examples of the different types of cryptocurrencies and what they are designed to do. This is not the whole list. It's just a sample. You don't necessarily support these currencies. I'm just trying to give you examples of different uses and niches with cryptocurrencies. It's not a recommendations of what you should buy or sell in the meantime. So the examples for worldwide financial transactions and the currencies which are used for it are Bitcoin, Litecoin, Tether, Ripple, and Stellar. The application platforms which are made using cryptocurrencies are Ethereum, Storage, Ccoin, MadeSafe. Private financial transactions are used to Monero, Dash, Zcash. And specialty currencies such as game credits or Redcoin are used in those projects. Take a look at these different use cases and figure out which ones make the most sense to you. Then understand how each software implementation works and think about what is probably do well in this future. All right. The next question would be, how do you store cryptocurrencies? With fiat currency like US dollars, you can store them at the bank or in your wallet. It's pretty straightforward. But with digital currencies, there are a few wrinkles that you need to get your head around, but the idea is similar. Let's take a look at how cryptocurrencies storage works. You store your cryptocurrencies on a blockchain in a wallet. That is simply an address on the blockchain. It's like how the website address directs you to the website, but on the internet. Each wallet has a public address and a private address. The public address is the address that people send funds to. The private address is a password that you use to access and send your funds. Never expose your private key until you are ready to spend your funds. Otherwise, you will probably lose all the money in your wallet. There are an example from a Bitcoin paper wallet, like in here. Now you can understand the basics of cryptocurrencies wallets. Let's take a look at the different wallet options out there. There are different ways that you can store your money. Online wallet. It is probably the easiest way to store your money, but it is also the least secure. So it's not a good long-term storage solution, but it is fine for buying things and funding your trading accounts. Exchanges like Coinbase or NAGA Wallet, and also have their own wallets built in. Mobile wallet. You can download a mobile app to store your spending money. It's more secure than an online wallet, but if your phone ever breaks or it gets hacked, everything in your wallet will be gone. The desktop wallet is similar to a mobile app, but just a desktop computer. This is basically a hardware device wallet. There are hardware devices that are built especially for strong cryptocurrencies keys. They are safer than the options above, but they are still uh, they're still hackable to the things that can damage all electronic devices. And the paper wallet. You can also store your private key on a paper, like in the picture above. There is the most hacked-proof, but let's say hacked-proof. It's protected from hackers, but it's also the least convenient. If you are going to do this route, be sure to store them in a safe place, like a safety deposit box, and you don't actually use paper. Use something like it's just to make sure that your money isn't lost to something as simple as a spiller beer. All right, guys. Oh, I'm sorry. Yeah. The next slide is called Cryptocurrencies Tracking App. There are multiple websites which help you to track cryptocurrencies, but I would personally recommend a website which is called iCoin Sentiment. Um, iCoin Sentiment is a website that allows you to display currencies by market capitalization, volume, and other ranking factors. They are also have cool charts, very useful for seizing what is being actively traded. Also displays prices in your currency of choice. It has multiple instruments, and later on, if we have time and if you have questions, we can go on this website. I will show it to you. And there is also pre-installed AI, automated intelligence, to see the trading signals, whether you should buy a Bitcoin or sell Bitcoin or any other currencies which is listed on the website. All right? Okay. What can affect the price of a cryptocurrency? This is one of the key questions of today's presentation, because I think many of you invited today's webinar in order to understand how they can benefit from the cryptocurrency volatility. And we need to take a look deeper in this question in order for you to understand the principles. So there are many things that can affect the price of a cryptocurrency, sometimes very quickly. Um, Here is what you need to be aware of when you trade cryptocurrencies. Of course, there is no guidance that these things will move to the market, but based on what we have seen so far, exchange, yeah, like so far, I'm sorry about scrolling the presentation. So the exchange listings, this is a big one. When Coinbase added Litecoin to their already limited list of cryptocurrencies that can be bought, they made it easily accessible to an average person. Soon after the Coinbase launch, the price of Litecoin started to skyrocket, and it never looked back. Now you might be thinking that it could be a simple coincidence. Yeah, it could be, but it's very, very likely that exposing Litecoin to Coinbase's user base helps to boost its price dramatically. So when a large exchange announces that they will start listing the cryptocurrencies that you are trading, um, take notice. Watch exchanges like Coinbase, Bitfinex, Poloniex, or SEEX. Now, it could give you it a boost you have been looking for to benefit from cryptocurrency appreciation. Like software updates is also one of the key factors. Over the past few years, there's been a lot of discussion in the Bitcoin community about upgrading the core software functions of Bitcoin. The primary discussion has been around the transaction speed of Bitcoin. If you have ever funded your trading account with Bitcoin or tried to buy anything with Bitcoin, you will understand what I mean. For a digital currency, the transaction time is a little slow. It can take about 30 minutes or more to do a single transaction. Um, let's say I would tell you a short story from my own. I was transferring $50 in Bitcoins from one wallet to another in late December. At that time, there were more than 200,000 unconfirmed transactions, and commissions were very high. Like for if I wanted to these transactions to be included in the next block, the commission I needed to pay for the Bitcoin blockchain would be like $30. I decided that it's way too expensive to pay $30 fee for transferring $50. So what I did, I manually decreased the commission to $5, which was like 10% of the transaction amount, which is way too high still, but I was okay with that, and I was hoping that the transaction would be approved like in, let's say, maybe not in next block, but in 5 next block or 10 next block or whatever. It wasn't urgent. So what happened is that transaction stayed unconfirmed for 2 weeks, literally 2 weeks. I paid 10%, $5 for transferring $50, and I waited 2 weeks for the transaction to be confirmed. So that was in late December. It was my personal experience. So upgrading this speed has been hotly debatable and finally led to the creation of Bitcoin Cash. After the split of Bitcoin Cash, Bitcoin has taken off to new heights. There will be countless other software changes across all cryptocurrencies, so make sure that you understand the implications of those changes. The next one is called public hype. Of course, you're familiar with this one. And just like fake tweets can affect the price of a stock, any type of hype can affect the value of a cryptocurrency, good or bad. So before you dismiss something as just hype, remember that hype moves markets too. But if you do trade hype, be sure to close your trade out long before the hype has a chance to cool it off. Otherwise, it could be a very expensive lesson. Alright, the next one is wallet improvement. Since you are reading some news and you probably want to start actively trading cryptocurrencies, but there are many other people who are investors and want to buy and hold for the next few years. This is where storage becomes an important part of a cryptocurrency evaluation equation. Unlike traditional fiat currency that can be stored in a bank, your trading account, or your matrix at home, cryptocurrencies need to have a compatible wallet or cold storage solution to be stored safely. Remember that cryptocurrency is simply software, so the wallet software needs to be able to work with cryptocurrency software. It's like trying to use the Windows version of Microsoft Office on a Mac. That simply don't work. Therefore, if a cryptocurrency does have a good wallet yet, that will prevent less technical investors from buying this currency. But as soon as one is available, then it makes the currency much more accessible to the masses and thus more valuable. If you find that cryptocurrency does not have a good wallet solution yet, that could be one signal that it's undervalued. Looking for opportunities to buy immediately after the launch of the first high-quality wallet could give you a nice short-term profit. The next option is platform applications. Some cryptocurrencies platforms like Ethereum host other applications. These applications in turn can have their own currencies or tokens. If one of these D apps or decentralized apps does very well, that can have a positive effect on underlying platform currency. The value of the tokens should theoretically be independent of the value of the platform. However, not everyone understands this, and the success of 1D app can drive the price of Ether, at least in the short term. So if you are trading a platform cryptocurrency, watch promising apps on the platform closely. And of course, the last one, but not least, is called government regulations. Finally, government regulation can have a huge effect on the value of a cryptocurrency. One example is Venezuela, where the police have been arresting Bitcoin miners on made-up changes. This has forced miners to go underground to start mining Ether instead. But this could happen in any country, any direction. By the NFA or SEC could affect the value of surging currencies. The SEC has already banned certain initial coin offerings or ICOs due to potential pump and dump situation that could happen in those coins. Be aware of current trends in government regulation and steer clear of currencies that could get red flagged by government agencies. So far so good. That was all for now, and we have like 10-15 minutes left for your questions. So guys, if you have any questions, you're more than welcome to type those questions in the question section, and I'm gonna take a look at it and try to do my best to answer those questions for you. All right, I did receive one question about the iCoin sentiment website. What is this website? What is the purpose for it? And let me really quick jump in here. Okay, I hope you can see a proper screen, right? So this is a NAGA trader. We can actually discuss NAGA trader as well, but I believe that if you are joining this webinar, you're familiar with NAGA and their platform, which is really nice and really comfortable for new traders to make transactions. All right, so iCoin sentiment website. Yeah, we can go in here. Is a website which shows you, first of all, a total market cap of all the cryptocurrencies. Like you see today, the total market cap decreased. Yesterday it was more than 200 billion. Today it's less. Yeah, it can show you the 24 hours trading volume, like how many cryptocurrencies were traded. And it can also give you the list of cryptocurrencies which are traded worldwide. So you see the price, you see how it changed in 24 hours, late 24 hours. And you can also see, if you click on it, you can go ahead and see the market cap of a particular currency, the 24 trading volume, the total supply, market supply. You can see a chart, which is also very nice in here. And let's see, you can jump in here and see the market cap, the price, how it volatile, how it was based. The AI will suggest you whether to sell or to buy any particular cryptocurrency. And that's basically it. So it's very nice. I use it myself, and you can use it as well if you want. All right. So guys, do we have any other questions? Let me see. A lot of people are saying thank you for the webinar. Yeah, I do appreciate that, and thank you for attending, but probably we have some other questions right now. Is it possible to trade Forex on NAGA Trader? Yes, it is possible. Let me show it to you. This is my NAGA Trader trading account. So you basically see that there are different markets on NAGA Trader in here, and you can find Forex as well. So you can click on Forex. You see a list of currencies which you want. Like let's say you're trading the Great British Pound instead of Japanese yen. Yeah, it's easy. You can press sell or buy button. Yep. Then you can choose the amount which you want to invest. Oh, sign me off. But anyway, you can change the amount which you need to invest, and then you can press a buy sell button, and basically you can very easily trade any type of forex currency pairs on NAGA Trader as well, right? There are CFDs of different types. There are equities like UK, Germany, Holland, Spain, France, and there is also a wide range of cryptocurrencies which you can buy or sell from your NAGA Trader account. The question, the next one is, do I trade with NAGA myself? Yes, I do trade with NAGA myself, and it's a reliable broker. All right, what cryptocurrencies do I trade usually? Like, there are very different. I would say that I'm not really trading cryptocurrencies like in intraday. I do trade stocks mostly, and stocks I do trade intraday. That means I open a position in the beginning of the day, and a couple of hours later, or by the end of the day, I close my positions. What I do with cryptocurrencies, I mostly hold my positions for several days, and I prefer to invest it in a long term rather than catch some small movements. But there are different strategies, and basically what you can do, you can develop a strategy for yourself, which suits you best, which bring you profit. We're gonna speak about the trading strategies in next two webinars. The next one will happen next Friday. It would be about technical analysis. And in 1 week, we will have another webinar on fundamental analysis. So what I was telling to you is that you need to develop your own trading system in order to benefit from market fluctuations. And my trading system is mostly based on long-term hold, or as cryptocurrencies traders call it, HODL strategy, when you buy and you hold it for months or 2 months, 3 months, and wait for cryptocurrency appreciation. So I was buying Bitcoin um, late last year. Um, I sold it already, but I was buying Ethereum at that time as well. Um, I did purchase some Monero, yeah, for sure, and EOS as well. I'm also investing in various ICOs, and some of them are profitable, some of them are not. So basically, I would tell that I invest in very many different instruments, as well as I was buying a NAGA coin as well. All right. Yeah. Do we have any other questions? All right. Now, some people say thank you, and I would like to thank everybody for attending the webinar. It was very nice having you here. I wish you guys had more questions, and I encourage you to ask questions on the next webinar. But for now, that's it. Thank you very much for attending. Have a great weekend and a nice trading weeks. Thank you. Bye bye.